Joining me for a broader look at this afternoon's market performance is Greg Katzenellenbogen from Sanlam Private Wealth. Greg, thanks so much for your time this afternoon. So trade remains choppy. We saw U.S. markets closing in the green overnight. Stocks mixed in Asia. We are seeing stocks flat over in Europe. Are investors just waiting for fresh market moving catalysts, that being perhaps Nvidia's results as well as the Fed minutes?
I think it's a little bit of both. Investors waiting to see Nvidia's results at the market close tonight, but also markets just digesting a little bit. It was a very strong day on the US yesterday after Trump announced that the Europeans had approached him and asked for an extension on the date of when tariffs will come in. So we're treading water. But South African market overall, the ALZ and the top 40, as you mentioned, are in the green, and the resources are doing quite nicely, having a bit of an uptick in gold prices again today. But generally, resources have had a good month.
And what are your expectations when it comes to Nvidia's results, Greg? Are we in for another bumper quarter?
I think so. I think that the earnings for Nvidia will be very strong again. I think it's something we will probably see something like 40-odd billion, I think, for the quarter, which will be an increase from the previous quarter. The earnings per share are expected to be about 75 US cents, but the key thing is that the these data centers, which is crucial for AI infrastructure, that's going to generate about 25 billion for them. So that's on the plus side. We will have to see exactly the net effect of, the US have put export controls on Nvidia and sending certain chips to China. Analysts have worked out that could result in about 5.5 billion revenue loss for them. But recently, when the CEO of Nvidia was in Taiwan, and they're doing a joint venture with them. So all in all, I think that the results will be decent, but of course you can get these decent results and then the CEO in his commentary makes a comment or two that could send the share lower. But I think that he will be positive about that, because I think there are a lot of positive things happening. But the key risk for Nvidia is what will happen about Trump and the export controls for that. But it's the share took a big dip recently, went under $100. It's back at around $135. It's still off its all-time high, but it's going to be interesting to see, because it's highly, it's got quite a rich valuation. It's got a forward PE of about 40 times. So we'll have to see whether those, earnings justify that. But it'll be certainly looking, with a lot of interest to seeing those results tonight.
And sticking in the tech sector, Greg, Apple's production capacity under the spotlight. Now, the group has been gradually increasing capacity in India as it shies away from China amid tensions between Washington and China. President Trump not liking the move and warning of 25% tariffs on products not made in the U.S. by the company. He also listed Samsung as one of the companies that could face those tariffs of up to 25%. What's your reading on that move? And do you think Apple will be able to stomach this?
Look, I think, Apple is a massive company, got a lot of cash resources, but at the end of the day, if your product is going to jump by 25%, other consumers will then look for other options. The thing in its favor, essentially, is that it's not targeting just Apple, as he mentioned, Samsung as well, or any smartphone coming into America will subject to these 25% tariffs. But I think that, the US is making a mistake there. You want to focus on high-end production instead of worrying about whether you can produce an iPhone in the US. I think cooler heads will prevail before these tariffs are actually be set, because Apple is a very big company and it's very important to the US economy. So I think this is a little bit like shooting themselves in the foot. And also to bring that production back doesn't happen overnight. It takes time. So if they give them some sort of extension in order to start opening some factories, but I don't think it's really in both Apple or America's interest to actually start manufacturing iPhones in the US. They can't get the same scale that they can get where they're currently having it made.
Let's bring it back home and look at some local company news. Tiger Brands out with half-year numbers showing growth in both its top and bottom line, exceeding expectations, Greg. And that share price jumping over 5%. Is this on the back of that payout? They've also declared a special dividend.
Yes, they did. The earnings were very good. And then also declaring the special dividend, that was a little bit of a surprise to me, because Tiger Brands is still facing this class action on the listeriosis crises that they had. So you would have thought they would have, but they obviously think that they've provisioned sufficiently for any outcome of court cases. So investors have been rewarded. Their profits doubled. Their headline earnings share up 34%. So the market likes us, and certainly the special dividend helped propel the share price up today. They've also they've been streamlining their business, and on the maize side as well, they're selling that business, and also I think Langeberg, which makes the Koo product. So they've flagged a few businesses. I think one in South America that's also that they're targeting for sales. So they're still going to further streamline the business, and I think that market has liked that, investors have liked that, but the special dividend certainly gave the market some impetus this morning.
And squeezing one more story before we get into the stock picks clips, a bidding war seems to be brewing in the property sector, Greg. Earlier this week, we heard from Hyprop announcing its intention to acquire Mass. This time around, PK Investments has upped its offer for Mass. What do you make of the moves playing out there?
Well, I think, look at, that PK group, I think they already own just under or around 22% of the shares of Mass PLC. So they're really looking just to buy the shares that they don't hold.
Okay.
And you can already see that they would like to get this deal over the line, because originally they offered about 80 euro cents. Now they've come €1.10. So it is an increased offer. And then also, part of that whole deal was the maximum consideration would have been about 40 million euros in cash. They've doubled that now to 80 million. So I would expect that shareholders will probably like this deal and go with that. I'd be surprised if Hyprop came with a higher offer, because it might not make financial sense.
All right, let's reflect on some counters that have found favor with your industry peers.
I'm picking Mondi. So it's one of the the more integrated packaging stocks that you can buy into. They own their own plantations in South Africa. They also generate a lot of their own electricity. So these things kind of protect the business from when wood and pulp costs are rising, or when energy costs are going crazy, like it did when Russia invaded Ukraine. But the reason to buy Mondi now is because that they've been busy with expansion projects, and those are starting to come online. So they've invested in additional capacity at their Stetti mill. The Duino plant's coming online, and they bought a business, the Schumacher business in Germany. And all these things are going to start coming through and filtering through to earnings. So I think you're going to get a bit of you will get an additional growth in earnings from the projects coming online. And the margins are not at peak margins, so it is a cyclical business. Margins are compressed at this point. So I think as the new capacity comes online, perhaps you get a better macro environment, margins can improve on top of that. And all this adds up to a double-digit earnings growth.
The stock is Melexis, as you said, listed in Brussels, and they are in the semiconductor industry. They sell chips and sensors that go into cars, but this is very high-tech sensors, and a lot of their market share gains the last 2 years have come from China. So as China has gained market share with EVs, electric vehicles, taking market share from internal combustion engine vehicles, the suppliers of sensors and advanced chips to those Chinese vehicles have also done well. and Melexis is one of those. But they still have the base of clients also in the traditional ICE market. So it's been swings and roundabouts where they win on the one side, lose on the other side, and the share price has been under pressure. But the business has actually been stable as you have these two streams going in opposite directions: growth in China with EVs versus some contraction in Europe in ICEs.
Melexis and Mondi up for your analysis. So what do you make of those counters, Greg?
Look, I like Mondi. You know, it's a global company. It's a leader in what they call sustainable packaging. They've done very well. I think tariffs don't really apply to them directly, but although it does to their customers, I like the stocks. The results were good. I think you know, obviously they want to move away from plastics and sustainable packaging, so that has been quite a challenge to get all their companies, because it costs money, you know, to unfortunately the sustainable packaging is more expensive than non-sustainable, so that has been a challenge for some of their customers. But I think it's a good company, and the results were good. So that one, I must be honest, the other company that JP mentioned, I've never heard of. And the interesting thing that he mentioned, you know, that they sell these semiconductor chips for the auto industry. So yes, the auto industry in China been doing exceptionally well, but the auto industry in Europe has had a terrible time. So it wouldn't be a stock for me.
All right, so what is a stock for you? What's your stock pick?
Oh, my stock pick is Eli Lilly. That is the global pharmaceutical company. You know, they get most of their money from drugs for obesity and diabetes. You might have heard of you know, Ozempic, which is made by a Danish company that has until recently been the world leader, but Lilly has got a few products. One is called Mounjaro that gives them about 25% of their revenue. But the key thing, most of these GLP drugs, as they call them, are injectable, and they are currently in stage 3 trials to produce just one tablet that you'll take, I think, once a week. And that will make it much easier for people. But it's a global, it's expected that the market for diabetes and obesity drugs by 2030 will be $100 billion market, and I expect them to grab a significant share of that. Also, in October last year, the share traded over around $900. At that stage, it was valued at around $850 billion. So the share price has come down quite sharply after Mr. Trump was talking about reducing pharma prices in the US. I think it's an opportunity with the stock at these current levels, and it's not impossible in the next 3 to 5 years that this could become the first $1 trillion market cap pharma company.
Greg, thanks so much for your time and taking us through trade at midday. That was Greg Katzenellenbogen from Sanlam Private Wealth.